Hi everyone, it's Steve here again, so welcome back to my channel, and this video we're going to be looking at the ADX and DI indicator. So what we're going to be doing is I'm going to have a series of videos that's going to look at some of the best free open source scripts on TradingView. I assume that if you're watching this that you will have a TradingView account already. Well, maybe you might not. But if you don't, there is a link at the bottom of this video, and in the article as well. So yeah, so this video is about ADX and DI, which stands for Average Directional Index. And so this is a very, very popular indicator. Okay, so ADX is a very, very popular tool to determine the strength and direction of a trend. And there's several different ways that ADX can be used, but I'll be explaining how I use them in particular and how I use this specific script, which I will be publishing soon in my TradingView profile. So by the time this video is released, you should be able to access this exact script. So essentially, the ADX has three different components. You have the ADX yellow line, which shows the main strength of the trend, and then you have the two lines which show what direction the trend is in, whether it's up or down. So the yellow line is isolated from the DI plus or minus because it, as you see here, what happens is the yellow line is rising the whole time, and this is a negative trend because you see the red line here is rising, and then you see here it starts to fade, and then the positive line starts to rise here. What I like to do is I like to set the style to an area, because personally speaking, I find it slightly easier to read, and it's slightly less ugly. But this is just a personal preference, and you may want to keep the lines because you might see them as being easier to read. Okay, so I've just changed the colors around a little bit, and so you see what I've done here is I've set the DI plus and DI minus to areas, because as I said, I prefer seeing it this way because I like the way that it visualizes better than the lines personally. Obviously this is entirely up to you, but for example, if you have a look at how it represents in the daily chart, you see the area is this shaded bit around here, so the negative DI is this sort of dark, sort of reddish, darky patch here, and the whole time this is here, it's rising, and then it gradually sort of falls. So it's almost like a sort of a cloud or a band that expands and contracts, and then the positive DI is this sort of whitish patch here. So the second thing is the length is something that you can change. The default is actually 14, but I prefer 20. So you see what I just did there. I switched it 20. So I prefer using 20 simply because it's a little bit smoother. And what I like to do is I like to look at these little curves, because what we're looking for is when there's curves and then starts to sort of reverse, or it curves and then peaks and then reverses. You see on a lower number like 14 or something, you sometimes get sort of one or two little bumps rather than sort of one big smooth bump, and that's okay. It depends. It might depend on the time frame you're trading, or so here you see the difference between this on. Okay, several more things. So there's also a threshold function here, which means that if you want the background DI plus and DI minus to be filtered out according to a threshold, so say for example, any readings below 20 you want to discount, you put in 20 here into ADX threshold, and you see what happens here the whole time. This just shows a sort of a blank sort of black background really. 20 is pretty high. I would not use ADX threshold of 20, but let's say 13 or something. So you see with 13, it cuts out periods which are very weak or where it's not really moving. Personally, I don't always have it on. If you want to switch it off, you put it to 0. You see here, if you put it to 0, then it shows everything. And so next is the CR1 and CR2 functions. CR3 and CR4, I would not use them for the moment because I was experimenting with something, and so that they're not really finished. I've left them on there anyway, because at some point I may decide to re-engineer them or see what I can do with them. But CR1 and CR2, the purpose of these is really quite clear, and you can also set signals according to CR1 and CR2 as well. What CR1 does is, if you click that, it shows you where the positive and negative DIs cross over. So immediately you see here, right? This is on the 3rd of November last year when the huge dump started happening, and you see immediately here, it actually crossed over the day before. So yes, I mean that would have been a good time to short. I mean it's for a pretty good signal itself actually. And CR2 is pretty similar, except that the only difference is that it's this is more for visual purposes. CR2 is so that the color of the minus or the plus is constantly in the background, and I like having this on simply because it gives me a very, very sort of good indication of what the current trend is actually. And if you sort of switch it on and just watch the yellow line rise and fall, you'll gradually be able to sort of figure out and get some insights into what's going on. So one more thing with CR1 and CR2, you can actually set an alert for these functions. So for example, what I did there was you click on this box up here, the condition, and the condition you select your indicator. So here this is ADX and DI 20, and then you'll have this drop down box on the second row, and see here it will list CR1, CR2 is. So there's CR1 DI cross long signal, there's CR1 DI cross short signal. So for example, you would do that, and then in options here, now this one here, I would set this to once per bar close. Some people use once per bar, but I would say once per bar close is safer, because if you do that, then you will it will wait for the candle to finish forming basically before triggering if true. So here you go. I mean, obviously you can just set set the alert to send an email, to show a pop-up, make a sound or whatever, and for those of you using anything like AutoView or any other bot, you can put the syntax in here to execute the trade if you want to. So yeah, I hope that was useful. Okay, so the thing with if you're going to set an alert with CR2, because it works a little bit differently, I would only set it to only once. This background shows that this condition is constantly true. So for example, it would mean that if you set this to, say, once per bar close or once per bar, it would fire the alert every single time period that you set it on. So on a daily chart, it will fire every single day. Maybe you want that. Maybe you actually sort of want that. But if you're wanting to execute signals to trigger an alert to buy or sell using a bot, then that's probably not what you want. CR2 is different to CR1 in the sense that it will trigger every time the condition is true per candle or per bar. So for example, on a daily chart, if you were to set CR2 short here, essentially the alert will be firing every single time on every single day that this background is red basically. I mean, that could be useful in some circumstances. It's entirely up to you. But if you're going to be using it on a really low time frame or a lower time frame, then you're going to be getting too many alerts. So, for example, if you're going to be using on the hourly, that would be pretty counterproductive because you don't want to be getting a signal, 24 hours a day. So for alerts, I mean, especially for alerts where you actually might want to take a trade or execute a trade immediately, I would use CR1, because CR1 only triggers when there's an actual crossover of DI plus and DI minus, or vice versa. But CR2 I like having on because just visually as a guide, I think it's a little bit nicer and it's a little bit clearer to see what's going on, because you can see here, you can see the areas in the background which match with the upper area here. Because if you turn CR2 off, you'll only see the area, and you see there I've actually got the area in black, which is why it didn't appear. So yeah, I hope that was useful. Okay, so moving on to the really juicy stuff. I'm sure you want to know how I use ADX to enter and exit trades. Obviously, it's not the only thing that I use. There's lots of other things that I use. If you've seen my trailing stops video, you will have seen that I use quite a lot of indicators at different times, and I'm not necessarily recommending that you use loads and loads of things, and at different points as well, because I'm going to be doing a lot more videos. I will be explaining more of the indicators that I use and how they can complement each other. But for the purposes of this video, we are talking about ADX. So with ADX, we are looking at the daily chart, and as I said before, daily charts set to 20. I prefer using Heiken Ashi candles in general, simply because it cuts out a lot of noise. So what I was looking at was, well, first of all, during the week of that huge nosedive, well, there was a couple of things. Your first thing was that, you see here, like, this big, thick yellow line, the ADX line, was rising the whole time. So that should have been telling you that, this downtrend is intensifying. It's intensifying. At some point, it's going to fade. And you see here, in particular, so basically, it's around here that, the worst of the downtrend had finished by then, and and it was around here on the 17th of December. Like, I put a long around here because I was watching this the whole time. I was thinking, and I had some shorts down here as well. I didn't exploit this as much as I could have done, actually. I did have some shorts here, and I did make some profit there. But the trade that I was most proud of was probably the one around here, because I saw this happening. And okay, this here was a minor rebound, but it continued going down. And as you see, sort of, this, you do have to sort of look at a few of these curves to sort of get a general feel of when and where the trend may end or peak, because sometimes it does happen in slightly different places, and that's why I would say you should use other indicators to read what's going on as well. But for the 17th of December, I saw that, okay, like this huge bulge here, this is a really big reading. I knew that as soon as this was fading, this is going to rebound the other way, and it did. So I got a long, and I pretty much caught it. I'm not sure where I exited, but I caught most of the move anyway, and I may have exited a couple of times and re-entered. But anyway, and then you see what happens here is that after the rebound, it starts to fade, and that means everything fades. So this sort of dies down a bit, and then there's a final push around here. You see this wave here, this negative wave it's weaker than this wave here. It's a lot weaker. However, it still goes fairly low, and you will often see this happening, particularly when there's a really strong trend. going on that lasts over the course of weeks. You see what happens here, So this is the final sort of downward push, and again, I was watching this the whole time, and again, around about on the 8th, that's when I put in the long. You see, because I saw this emerging right there out of the negative, and I thought, okay, this has got to be the end of the downtrend, and as it was, it's proved to be right. So that was. I mean, we can go and look further back in time actually, because I'll show you what happened in 2017. If we're going to use ADX, look here, so this was, this is the whole period here from about October to December. This is the bull run, where it jumped all the way up to sort of 20k. You see what's happening here, the whole time, this ADX line is kind of rising. Okay, there's a slight sort of bit here where it fades, but even then, this is still rising. That's a pretty bullish sign, because sometimes it will rise and then dip and then continue, and then right here, look where it starts to nosedive. It's just shortly after this curve, and because this curve is right up here, like if you get a really, really extreme reading of, say, sort of, I don't know, 70-ish, so if you get a really extreme reading of, say, 70-ish, that very often leads to a really, really aggressive rebound in the other direction. And as you see here, that's exactly what happened, because from the whole time here, like, it just, just shot down by about sort of 6,000-ish, 5,000-ish dollars here. And the whole time this was fading, and obviously there was a couple of little rebounds, but boom, as soon as the DI plus was basically exhausted around here, you see what happens. It nosedives even further. This is January, and again, look what happens here. The DI minus is rising the whole time, and then the ADX line, it rises and it peaks around here, and again, this is where you see a rebound. So this is why, you gotta look out for when these curves, start to peak and then reverse, because it can be a good time to start getting in here. I mean, you do have to be a little bit careful sometimes, because especially on lower time frames, because I'll show you on the hourly. Just looking for what happened in the last few days. So here's an example. Again, like here, what's happening here? So this was a very sort of weak downtrend that basically finished, and then it started emerging here. But you see right here, so this peaks and fades here, but there's a final little push up, and this is obviously a weak move that is designed to stop people out. It's a fake out. It's what the whales, it's what the players are doing, their games, to basically trap people in weak positions, because there's going to be people taking longs around here that got faked out. But you see here, what happens straight afterwards. It nosedives, So I guess, I mean, you could sort of put a short there. Just make sure that your stop is not really, really tight. Obviously, don't use ridiculously high leverage like 50 or 100, because it won't allow you room for that. Stick to sort of 5 or 10 leverage, and then if you put a short there, if it goes up there, it's not the end of the world as long as it doesn't hit your stop, because it's moving in the right direction. You see what happens here, the whole time. Then it moves into negative DI, and then a further crash here, from what we saw yesterday. Big extreme move down. So I hope that was useful. Okay, so the final thing that I'm going to go through is the this indicator here, which is RSI and accumulation distribution. Now this is basically an edited version of an indicator called EMA of RSI. I'll show you the original one. So basically this plots an EMA that straddles along the RSI, and I mean, it's pretty useful for looking at divergences. If you not sure what divergences are, there is a link to an article which explains divergences in my article, which will be posted below. And Chris Moody, he's done a lot of really, really good stuff. Like, without him, there'd be a lot of things I wouldn't know, to be frank. But the RSI AD, it's a very useful additional confirmer to see what's going on, because as you see here, I mean, basically sort of the RSI AD, the one that I made, or the one that Squiggles helped me make, even. It's a sort of more advanced version of this, because this has only got two components. This has only got the RSI itself, the jagged line, and then the EMA of the RSI, whereas RSI AD has got an accumulation distribution line, as well as the RSI, and it's got one EMA and two SMAs, and okay, so there's possibly quite a lot going on. You don't necessarily need all of them at once. You can see here I've switched off the RSI and the AD. Actually, I've just left the RSI EMAs and the SMAs, and what I've done is I've got them at different lengths, so 7, 14 and 30, and so that's so that I can tell when something is fading, basically, or starting to rise, because you can see here, look, 22nd of April, these lines are now passing over each other, up and under, so that shows there's a positive move. And around here, not too long before the nosedive happens, this is where they're starting to cross under. So I will be publishing this script on my profile page as well, so hopefully you can have a play around with that. It's very, very useful. So yeah, I hope that was useful, and don't forget to subscribe to my channel if you like this video, and have a look at some of the other videos I've done before. There'll be a lot more coming out pretty soon. Thanks for watching, and I'll see you soon. Bye.